Good afternoon. Thank you for joining us for the 2015 State of the Industry webinar. I'm Jonathan Sweet, the Editor-in-Chief of Boating Industry, and I'll be moderating today's discussion. Afterwards, if you'd like to see this presentation again or share it with any of your colleagues, it'll be available at boatingindustry.com/webinars. Today's webinar is brought to you by the Marine Dealer Conference and Expo, the industry's premier dealer education conference. This year's MDCE, produced by Boating Industry and the Marine Retailers Association of the Americas, will be November 15th through 18th in Orlando. For more information, please visit marinedealerconference.com. And today we're here to share some market intelligence and data with you, and we've got three great industry experts to do that. First, we'll hear from Vicki Yu, the Associate Director of Industry Statistics and Research at the National Marine Manufacturers Association, Peter Houseworth, Director of Client Services at Infolink, and Noel Aves from Spader Business Management. And after they speak, we'll answer your questions. You can submit those at any time through the module on your screen. If you look on your GoToWebinar control panel, you should see a little place where you can type in questions, and we'll answer those as we can. And this webinar is, of course, the companion piece to our annual market data book. If you're a subscriber to the magazine, it's included in your subscription. And if you haven't gotten it yet, it'll be coming in the mail soon. If you're not a subscriber, it is now available in the digital download section of our website, boatingindustry.com. And with that, I'm going to hand it off to Vicki.
Thanks for the introduction, Jonathan, and thank you all for joining us today. Let's get started. Next slide. Today I'll focus primarily on the state of the industry. I'll be talking about top-line trends we're seeing in the markets now, where we're seeing growth in what segments, and how we're expecting year-end to shape up. Towards the end, I'll touch briefly on headwinds we ought to be mindful of and the opportunities that lay in store. Next slide, please. 2014 was a good year. Retail sales of traditional powerboats, that's outboard boats, inboard boats, stern drive boats, and jet boats were up 5%. And while it's not the gangbuster growth we'd ideally like to see, sales have been rising for 4 consecutive years, which is evidence of a steady and solid recovery. We're expecting growth to continue over the next 3 years, and that will end 2015 up another 5 to 7%. Next, please. By segments, sales in 2014 surpassed 2013 in nearly all categories, with the exception of canoes and kayaks that were down slightly. Next. Since the recession, most segments have bounced back by varying degrees. For example, the large saltwater fishing boats were up 73% in 2014 from its low point. The exception is stern drive cruisers, which on average remain weak. Although when we look at localized results, there are pockets of growth even in this market. In South Carolina, for example, stern drive cruiser sales were up 13% in 2014. Next. The growth leaders in 2015, according to advanced data through July, has been the water sports segments, led by double-digit growth year over year in jet boats, PWCs, and ski boats. Fiberglass outboards, the majority of which are small fishing boats, closely followed, up 10%, and this is based on new boat registration data from 29 early reporting states. Next. New boat spending, which includes the purchase of the boat, engine, trailer, and accessories, were up in 2014 across all of the top 10 boating states. And in this chart, they're in rank order, led by Florida, Texas, Michigan, and so forth. Next. Our group monitors various economic indicators that trend closely with boat sales. And good news came out this week in housing. In July, housing starts edged up again to a seasonally adjusted annual rate of 1.2 million, which was the highest it's been since October 2007. Even more encouraging was that the July gain was driven by a 13% surge in single-family starts. Wells Fargo also came out with their housing marketing index, and that hit a 10-year high of 61 this month. That indicates that confidence among home builders are rising, which are good signs for boating. Next. We're also seeing strength in the labor markets. Non-farm payrolls have increased by more than 200,000 jobs in 15 of the past 17 months, averaging 250,000 monthly over that time frame, which is very respectable. And while hiring in the manufacturing sector has been spottier than we'd like, in July, 15,000 workers were added, which was close to last year's monthly average. The current unemployment rate at 5.3% is at a 7-year low. And if we include discouraged workers and those who want a full-time job but are working part-time, the rate becomes 10.4%, but it's still at a 7-year comparative low. And job openings reached an all-time series high in May at 5.4 million. Next. While gas prices have risen since dipping below $2 earlier this year, at $2.60, it's still at historical lows, which is another piece of good news for our industry. Next. U.S. total retail sales edged up in July, and if we take away sales at gas stations, which have been dampened by lower gas prices, retail sales were up an encouraging 4.5% year over year. So consumers are cautiously spending, with that growth led by auto and building and home furnishings. Next. NMMA reports on outboard engine sales by the 10th of every month, and it's a good leading indicator on boat sales, as 4 of the 5 new boats sold are outboard powered. Year to date, outboard engine sales have been steadily growing, and through July are up 4%, and dollars are up 16%. Next. Now I'll speak briefly about some potential headwinds to our industry that we're currently monitoring. This chart from JP Morgan shows that the global economy continues to expand slowly. On the chart above 50 signifies expansion, and it's hampered by continued uncertainty increase and China's move last week in devaluing the yuan that's been making headlines. Next. This uncertainty in global markets has made the U.S. relatively attractive for foreign direct investment, which in turn has led to the rise of the dollar. But for U.S. boat builders, most of which are small business owners without overseas operations, exports have been dampened and through Q2 are down 3%. Next. This chart shows the age distribution of new boat buyers. In 1997, the majority of new boat buyers were in their late 30s to early 50s. 15 years forward, the majority of new boat buyers are in their late 40s to early 60s. And one way we've interpreted this is that the younger boater is a missed opportunity here. Next. Stagnant wage growth for middle-class Americans, which make up the majority of boaters, is another potential headwind. Since 1979, wages for middle-wage workers have risen 6%, which is essentially flat, while wages have been declining for low-wage workers, based on a study by the think tank EPI. Next. Rising student debt is another area of concern. In 2014, student debt nearly tripled what it was in 2004, rising to $1.2 billion. Also, the number of borrowers that default on loans have more than doubled over the past 10 years. Next. Those were a few headwinds. However, in the short term, the outlook for boating is good. More Americans are looking to digitally disconnect and spend more quality time with family. New product offerings and innovation is a proven growth driver. And in the past couple of years, we've seen a lot of coming together among industry groups to market boating to younger targets and ethnically diverse targets. And next. And that concludes what I'll be talking with you about today. Everything that I've talked about can be found in the 2 NMMA reports you see on the screen. And NMMA members receive complimentary access to both of these publications. My contact information is also on the screen, should any of you like to speak one-on-one on any of these topics. Back to you, Jonathan.
Great, thanks, Vicki. All right, next we are going to hand it off to Peter, and he's going to share some information from InfoLink. All right, Peter, should be all yours.
Great. Thank you very much, Jonathan. And thank you all for joining the State of the Industry webinar today. I'd like we only have a few minutes, but what we'd like to do is provide you with some updated information about the market so far this year through the end of June for the national picture. Overall, it's good news. We are coming in basically in line with what expectations were for this year. Through June 2015, the market's up approximately 7.5% on a rolling 12-month basis year over year, and we're sitting at approximately 222,000 units. We're seeing consistent growth in outboard as well as inboard boats, and very solid growth in the jet boat market. Stern drive, to follow up on Vicky's comments, stern drive continues to be a struggle, even from the kind of bombed out levels that we've already experienced, and it's fallen another 10% this year. So we're still looking for a bottom there. We're seeing continued weakness when you look across basically all boat types. In the smaller boats, 15 to 19 feet, with growth of just under 5%. I guess the big source of concern here is this is generally where we find those first-time and entry-level boaters. That's where they tend to live. So we did a little bit more digging, and I'm going to share a little bit more about these. We did a little bit more digging into these consumers, and we're going to share a little bit more about that in a moment. Again, in this 15 to 19 foot size category, we're peeling this onion back a little bit further, and when we look at just fiberglass vessels only, growth is actually a little over only 1%. Now within that, the stern drive market is actually declined down to 21%. So it's more exaggerated within the fiberglass segment. The good news is that this was offset a little bit by outboard boats and as well as jet boats, which we've seen several new manufacturers entering this space. So we'll stay tuned and hopeful for more good things to see from the jet boat market. Next, we wanted to kind of look at these entry-level buyers, and basically what we did was we took two groups of new boat buyers in this fiberglass 16 to 20 foot segment, and we separated them into two groups. One being value priced, such as Chaparral, H2O, Bayliner Element, and a few others, and compared those to other boats that compete in that same space but don't necessarily position themselves as a quote-unquote value brand. We looked at these two groups to see if there was any material difference with respect to a value buyer versus the general buyer in this category. And in a nutshell, not much. There's not much difference. The first chart up top, we looked at basically the incidence of prior boat ownership. So this is a measure of first-time boat owners, and we found that among value buyers, approximately 40% were first-time boaters. And that isn't it's not dramatically different than what we saw with respect to all buyers at 38%. We also looked at their prior purchases to see if value buyers were being converted basically from pre-owned to new status given this lower price point, to see if we were able to ascertain that a higher proportion of pre-owned buyers were actually moving into the new segment within the value. And again, here maybe a little. It's not dramatic, but perhaps just a little bit. And then lastly, we looked at the types of boats that they previously owned by propulsion type. And we again found there was relatively little difference. So our observation here is that generally speaking, value buyers are coming from basically the same pool as all buyers within this segment. That is not to say that value price product didn't entice more people that otherwise wouldn't have purchased into boating. It just means that they don't look dramatically different from the perspective of their historic participation in boating. On to some bright points, or bright spots in the industry. Saltwater fish continues to do very well. It's up 13%. Again, this is going to start to sound like a dead horse, or beating a dead horse, but even within that, what we saw was more growth in the inshore and offshore categories, and less so in the flats bay. And basically, flats bay we consider to be in the 16 to 20 foot size range among saltwater fish boats. And if you actually exclude flats bay from this category, rather than 13% growth among just inshore and offshore boats, growth was actually in excess of 17%, which is excellent. Jonathan, stop responding. There we go. Thank you. We also, pontoon boats obviously have been driving growth in this industry for the last several years. It's been a truly impressive run. Even through June of 2015, sales were 6.5%. Unit-wise, obviously it's hard to maintain that kind of percentage growth. As the numbers get bigger, the percentages kind of work against you. But it's still kind of hanging in there. We did note here again that most of the growth in the pontoon boat segment has been vessels in excess of 20 feet, with vessels under 20 feet not performing so well. Next. Thank you. Again, on the pontoon boat market, we looked at this information relative to geography. And I'm not sure how clear it is on your screen, but basically the color green, darker green indicates more growth, a lighter green, slower growth pattern, and obviously a red with a small decline. The thing that stands out here is that if you looked at this chart a year ago and certainly 2 years ago, basically the entire nation was dark green. So we're seeing even in some of these principal pontoon boat states up, and particularly in the Great Lakes, that growth does appear like it's slowing somewhat. But we're still in a positive slope. Next. And lastly, one of the other things that we look at is basically the health of the distribution channel, and we do that by measuring the amount of time that a boat is in distribution prior to being delivered to the end customer, and we calculate the number of days that actually takes. We've also provided some points of reference, being flats bay and inshore boats, freshwater fishing boats, pontoon boats, as well as runabout and deck boats. And as you can see, everything at this juncture looks in the distribution channel looks to be okay. We are watching it. It's sitting about 220 days on average for pontoon boats now. One thing that we do note is if you look at June 2015 and compare it to June 2014, was at right about 200 days. And June of 2013 was sitting down around 180 days. There's kind of a creep there, but just for drama, we included the last downturn, so you can see it kind of gives you a sense of how bad things can get. So we are going to continue to watch this metric to make sure that we keep a good supply and demand balance in the marketplace. with that, I'll hand it back to you, Jonathan.
Great, Peter. Thank you. So our last presentation today will be from Noel. And hold on just a minute, Noel. We'll get you all set. All right, Noel, it should be all set for you to go ahead and go. Noel, are you there? Well, it appears we may have lost Noel. Noel, do you possibly have your phone on mute? Oh, there we go. Noel, are you there? Alrighty, do I still have Peter and Vicki on the line? Let's make sure we're good there.
Yes, I'm here. Peter's here.
All right, Vicki. Vicki, you still there? Well, this is interesting. We appear to have lost a couple of our panelists. Well, this is the joy of doing a live webinar, I guess. So what we're going to... Well, hold on. What we will do then is I'm going to go ahead and see. Looks like we have a few questions here. Maybe we can go to a few of these questions, and hopefully Vicki and Noel will be able to get back on the line, and we'll continue that. Let's see if any of these questions apply to some of the things you had to say, Peter. Well, first thing a lot of people were asking is they're going to be able to get copies of the presentation, and yes, we'll have, especially as we're having a little technical difficulty here, we'll have the copies of the presentation available, as well as archived version of at least those first two presentations, and that'll be on our website at boatingindustry.com/webinars, or you can just find it under the webinar drop-down from the main home page. Let's see. One of the questions, and Peter, maybe you can offer some insight into this, is asking what is the trend on average price of new boats purchased with growth in PWC type boats? It seems like it must be trending down. Any thoughts you can share on that topic?
We don't have any hard evidence. I mean, all of our information comes off of registrations, which doesn't include any pricing information. So we don't have any hard facts on those. Actually, I think Vicki might have a little bit more insight on that.
Sure.
Jonathan, can you hear me now?
There we go, Noel. All right.
All right.
Great. Noel, let me make sure we're all set. Give you control of the presentation again, and we'll go ahead and do your portion. All right, Noel, you should be good to go.
Okay. Thank you. Thanks, and sorry for the trouble. I'm glad that I'm back on now again. And thanks everyone for your patience and participating in the webinar today. So I should have control of the slides now, right, Jonathan? There we go. So the first thing that I wanted to look at was the profitability, the bottom line. That is why we do all the hard work that we do. And so we're looking at the profitability of our marine dealers over the last 10 years. And in particular, we're comparing the last 2 years, 2013 to 2014. And what you see there is the bottom line was flat, basically, 3.3% net profit percent of sales for 2014, which matched 2013. Both of those years were down from 2012, which was a high of 4.1. And 3.3 is what we call at Spaders the minimum survival net. So while it's significantly better than the net profit that we experienced in the downturn in 2008, 2009, we're back up to our survival net. In order for the growth of the dealers, we like to see that net profit to be a little bit stronger. If we look at our sales, the top line, we can see that we had growth again in 2014, although as you've heard from the other panelists, it did slow down. Since the bottom in 2010, we've experienced double-digit growth in sales for the through 11, 12, and 13. In 2014, it slowed. We had about 5.5% growth, but nonetheless, it was still headed in the right direction. So the top line continues to grow, and not to the point where we were prior to the recession, but it's headed certainly in the right direction. The next key metric that I wanted to take a look at is the margin, the new boat margin. And if you look at 2014, again, you see I would call it relatively flat, maybe down slightly. What we're hearing from our dealers in the 20 group is that the margins on new boats that we had prior to 2008, the 18.9% margins, may not be possible in this new market. There's quite a little downward pressure on new boat margins. So it looks like we might be settling in around that 17% range. My next slide then shows our new boat inventory, and just as the sales have increased for the last several years, of course, inventories have also, in order to keep pace with sales. But the growth in inventory has been from 2013 to 2014 higher than the growth in sales. There was about not quite a 10% growth in inventory, and so the next slide measures, what does that mean? Is the growth in inventory outpacing the growth in sales? And so we look at new unit turnover, and we see that that was about flat from 2013 to 2014, 1.9 unit inventory turnover on new units, and that is again like the survival net, the less than 2 turn is a little bit lower than what we would like to see in a healthy industry. My next slide, if I can get that one, I wanted to take a look at used boat sales, and we can see used boat sales. We've had nice growth, steady growth since 2010, and there's a slide that I didn't include in my deck, but it shows when I look at the used margins, I'm seeing that the used margins are flat, also very similar to the new margins, and so it makes me think that maybe there's a missed opportunity there. And typically, we expect used margins to run higher than new. In this case, they are about equal to new, and they've been relatively flat. And when you look at my next slide, advance that one. I'll explain where I think maybe the missed opportunity might be there for some dealers. So back when we were putting the information together for the boating industry market data book, the numbers that we had at that time were May, and so we looked at May of 2015 compared to May of 2014 and compared the progress. So in my first column there, you see that the new boat sales at the end of May were up 15%. Used boat sales were up almost 14%. New boat inventory was up 18%, and the used boat inventory was actually down a little bit when we compare May 2015 to May of 2014. The used inventory was less. And let me just stop there and move over to July, because now I have the July data in, and I wanted to see, has anything changed in the last couple months? Some of the feedback that I've gotten in my 20 groups, as I've been to 20 group meetings in the last several weeks, is that the month of July, the pace of growth slowed down a little bit. So I wanted to test that with the July numbers. So if we look at the new boat sales, we see that the new boat sales really didn't slow down. In fact, they picked up a little bit, July 2015 to 2014. But we look at the used boat sales, they've lost that ground that we had made up in May. And if we look at what happened with our used boat inventory, as in July, it actually is 8.5% less than it was last July. What that says to me is we're running out of used inventory, and so we don't have those used boats to sell. And of course, if we think about supply and demand, if supply is low, then I would expect margins to be higher. And so when I look at used margins staying relatively flat, that's where I'm saying I think that we may be missing some opportunity there on the used boat market. The last two lines, my spending and the net profit, at the end of May 2015, we were spending not quite 8% more on all of our personnel, advertising, floor plan, semi-fixed and fixed expenses. And if we look at the end of July 2015, we see that spending increased a little bit. So we're spending a little bit more. And the bottom line, net profit, at the end of May 2015, we were 45% ahead of the net profit of a year ago. And at the end of July, we're at 25.8. So what it bears out what I was hearing in the 20 groups is that things did slow down a little bit in July. And so we just want to be cognizant of that and watch. It'll be interesting to see how the month of August goes. To finish, I wanted to close with, bring back some of the slides and talk a little bit about the, one of the metrics we look at is the most profitable dealers. So in this slide, this is the graph that I started with, the net profit percent of sales, and we can see that that at the end of 2014, 3.3. The stars that are up and about the 8% range, those represent the net profit of the 20% most profitable dealers. And so if we carve off the 20% top profitable dealers, we can see that their net profits were considerably higher than the average of all dealers. If I look at the same thing here on new boat sales, so my question was, where are they generating those profits from? We can see their new boat sales, again, that represented by the star, were a little bit higher in 2014 than the average dealer. And if we look at the gross margin, they earned a little bit higher margin on their new boats. So that explains part of it. And my next slide, if I can get my, this is where I think, and so this is where I think the real key is, and the caution. Their new boat inventory, while it has grown as the average dealer has, it hasn't grown at the same pace. The stars represent in 2014 significantly less inventory, so they're doing more sales, more margin with less inventory, and as a result of that, then we see our new turnover, in this case up for the 20% most profitable at about 2.5, maybe a little bit stronger than 2.5, so a higher inventory turnover. So what that says to me is the most profitable dealers are doing a little better job of managing their inventory and their margins. And if things are slowing, if growth is slowing a little, I'm glad to see that we're still in a growth period, but if it's slowing, very important for the average dealer to also be watching and managing that growth in inventory. And Jonathan, I'll turn it back to you.
Great, thanks, Noel. So now we're going to go ahead and take your questions. And Vicki, were you able to get back on the line? I know you were having some issues. You there?
Hello, can you hear me?
All right,
Hello?
we can hear Vicki. So, yep, we can hear you.
Yep.
All right, so we're going to go ahead and look at a few of our questions. And one of the questions we got from the audience was, people are wondering if you track spending on repowers, and are people spending more on boat maintenance? Vicki, probably our best bet is that you guys would be tracking that over at NMMA.
Yes, and just to address the previous question about average prices, to roll it all up together, we do track average prices as well as our estimates on maintenance spending. However, I don't have that data at my fingertips, but I don't want to hold this up, but Jonathan has your contact information, so we can get in touch with you individually to get you that data.
Great. And a couple people again asked about getting a copy of the presentation and seeing the archive webinar. So just a reminder that we'll be at boatingindustry.com/webinars. Let's see, we have a question here. One of our viewers is asking, do you have data on finance purchases year over year and by segment? Anyone have any numbers on along those lines?
We don't have anything.
The thing that we would have would be, and I'm not certain if this is where the question is going, the percentage of F&I revenue from year to year. We do track that. And I don't know if I've got if that's where the question was headed. Let me just see for the average dealer if calculate this real quick. So the average dealer in 2000, this is July, so I'm looking at July 2015. The average dealer reported F&I revenue equal to about 2.5% of their unit sales. So for every dollar's worth of unit sales, they had F&I revenue of 2.5%. That compares to a little less than 2%. So for the 7 months ending July 2015, F&I revenue was up for the average marine dealer as a percentage of their unit sales, if that's where that question was directed.
Okay, great, thank you.
Just to add to that, at NMMA we look at the Marine Bankers Association. I believe they changed their name recently to the Marine Lenders Association, and they come up with an annual report on boat loans and lending and financing, and we have some of that top-line data in our NMMA abstract, but they are also another good resource.
Good point. They do a good job of tracking that side of the market. One thing that thought might be good to touch on, Vicki, going back to your presentation, what kind of impact are you guys seeing so far with the strength of the dollar for exports? What kind of impact are you guys expecting that to have from the data that's coming in thus far this year?
Yeah, we're keeping a close look on it. So far we're seeing exports decline. Exports were down about 1% 2014. And you know, when I looked at the data earlier this week through Q2, it looks like it declined a little bit further. We're down 3% through Q2. So we're keeping an eye on it.
Okay. Noel, I think this one is aimed at you based on some of the numbers you were just showing us. The question is, are the trends in labor sales and parts and accessory sales for the top performing dealers significantly higher than average as well?
So could you say that again? Are they talking about total sales and service?
Yeah, in labor sales and parts and accessory sales. So looking at parts and accessories in our service department, are their sales significantly higher than the average as well, as we were seeing for some of the other numbers you were showing?
You know, I don't have those numbers at my fingertips. I've got them, but off the top of my head, I wouldn't be able to answer that. But I'd be happy to dig that information out and send it along to to whoever I can. I do have it. It just takes me a little bit of time to dig it out.
All right. Well, what we can do is we can track that down. I've got the person. I know the person who asked the question here, and then Noel, you can give that to me, and we can share that information with them.
Perfect. Yes.
Another question here from another dealer is asking, how has the dealer's expense structure changed since 2008 as a percentage of GP?
Since 2008. So
yeah, I think we're looking at pre-recession, basically. What have we seen change?
Let me. I do have that data. If I can pull that up here. Okay, so looking at the personnel expense ratio prior to 2008, the personnel expense ratio was running, the average was running about 46%. And now this year, 2014, it's 47. The average at 2014 was 47. So up slightly to where it was before 2008. Now in 2009, 2010, 2009 it was 52%. In 2011 it was 48, and then it started dropping off. So overall, people, which is the biggest expense, is up a little bit higher than it was then. Advertising has remained about the same at about 4.3%. Floor plan interest has actually gone down. Floor plan interest was, prior to 2008, dealers were spending 6.5% of their gross margin on floor plan, and now, especially with the low interest rates and inventories being managed a little bit better, that number is 3.5%. So that's probably where you see the biggest change. And then semi-fixed is virtually unchanged. Fixed expense ratio is lower than it was prior to 2008 by a couple percentage points. So the biggest change that I'm seeing and looking prior to 2008 compared to now is in the area of floor plan interest expense, and they're spending less on that currently.
Okay, great. One of the things we saw last year was some great growth in the PWC segment. Are we seeing that continuing this year? What are some of the trends we're seeing there? Anyone who could chime in on that?
Yeah, this is Peter. Yeah, we've seen a kind of a moderation, but we've had several years of very strong growth, so that's, I guess, to be expected. We through June of 2015, we're at 45,000 units so far, and that's growing at about 9%.
Okay. We have another question here. Guess ask you guys to get your crystal ball out a little bit, but what are you expecting for sales in 2016 and 2017?
I think overall what we're seeing is kind of a stabilizing. I mean, I think all the factors that that we look at kind of suggest more of the same. Some of the markets that in particular in Florida, which is a very important market for our industry, sales have been doing really well. Not so much in California, though. That's unfortunate because that also was a very big market, but it really just has not come back the way Florida has. But overall, I think we're expecting more of the same. So low to mid single digits.
Okay.
And this is Noel, and I would just add to that. That's what we're seeing also. One positive thing that I'll just share with the group, I just came back from a 20 group in another industry, in the office furniture industry, and those dealers deal with Fortune 500 companies, and they are experiencing significant growth, which tells me there's activity again now in corporate America. And that's very encouraging to me. If corporate America gets things fired up and adds jobs and builds new office buildings and starts to spend some money, that will be very, very positive for all of our other industries. So that was a bright light that I just heard earlier this week that I think could have a positive impact in 2016 for our dealers.
Yeah, that makes sense. It's good to hear. Vicki, anything you would like to add to that topic?
Well, we're also expecting to see three good years of growth ahead of us, and I'd say likely, at the end of this year, we're expecting 5 to 7% growth, and 2016 and 2017 probably continued moderate growth. Especially since, if you can, Jonathan, if you can go back to the slide showing growth in 2015.
Let's see, it's going to have to get us back there. Hold on a second. Sure you don't just want to look at one of Peter's slides? It'd be a lot quicker. Let's see. Which one are you looking for again?
Keep going.
Vicki?
Keep going. Keep going. Keep going. And one more. This one. This is pretty encouraging. With these growth segments that are up, 2, 4, 6 out of the 9 segments are growing. So this is a pretty encouraging sign for us.
Okay.
Yeah, there is a difference in complexion, though, in terms of what the market has looked like historically. I mean, jet boats are relatively small, so while we're seeing growth, relative to a 225,000 unit, base, if you will. Looking just at jet boats, is about 4,000 or 5,000 units. So while it's while it's up strongly, it's when you blend in the relative size, whatever the PWC is at 50,000 units, and inboard ski boats, likewise are relatively small, I think 6,000, 7,000 units, something like that. So while they are growing, they're not big relative to some of the others that are showing more moderate growth.
Sure.
The aluminum outboard that's a high volume, as well as both freshwater and saltwater fishing boats. Those are both high volumes, but the growth is kind of have to take it through that lens, I guess, if you will.
Absolutely. So we have another question here about participation. they're asking, is there new data on overall participation, such as number of days in the water, trips taken more than 50 miles from home, etc., number of participants per household? Any new data you guys are seeing that show us any trends in the participation in boating versus obviously the sales and things we're looking at today?
Overall, we did a study on participation in boating where we looked at the number of days boating, etc. And from what I recall, the 2015 data was didn't show much change from what we've been seeing on trend for 2014. But that data I don't have with me, but that data again is all available in NMMA's abstract. And I believe there was no major changes and everything was pretty constant, no downturns, significant downturns, and everything was pretty constant.
Okay. Another one of our viewers has asked if we think the California long-term drought may be contributing to the decline out there. Certainly, I would think it's a factor. But any insight you guys may have on that?
I mean, nothing specific. I mean, yeah, but obviously, and I think we've seen this, across the country when droughts are experienced that it does impact the market pretty. And it's not just California. I mean, we've had droughts in other places where, in Georgia, when Lake Lanier the levels dropped, and you can walk across the country, and it's happened many places, and it really does. It's painful. There's just no two ways about it, both from just an expense and overall expenditures on boating to even new boat sales. It does have an impact.
Certainly, I know we've seen it. We hear it from dealers, especially until the rain this year, down in the Austin area in Texas, as you said, Atlanta a couple of years ago. So it would seem to logically be playing back. Can't be helping, I guess.
Right.
We've had a couple of people ask about if you guys are concerned about the downturn or in the smaller part of the market. I think you guys, a couple of you touched on that with the shorter but smaller boats, I should say, and kind of what impact you see that having on our ability to bring younger buyers and entry-level buyers into the market.
Clearly, I mean, that's where, well, first, most first-time entrants actually come in via the pre-owned market. So, that's first and foremost. That's not new. That's been that way for many, many years. And I think, perhaps with, just to go along with that, plus the affordability issue and many of the other things that the manufacturers have recognized and trying to come in with value product, we're at a price point where it kind of opens it up for more of the population. It's still a challenge. I think based on the information that we were able to put together, and again, this was just a quick look at it. I mean, there's a lot of different ways that you can tear this stuff apart, but it doesn't look like. Again, we think it's pulling from the same pool of people. We don't detect that it's dramatically different. So I wouldn't think that, at least to date. I mean, I could do more in-depth work to say, to look at age specific for value buyers, but based on everything that I'm seeing so far, it doesn't indicate that this is a whole new paradigm here.
Okay. We also had a question someone was asking about if, and I'm not sure if you guys have any insight into this, but they're wondering what the total marine dealer count is versus dealer count of years past. If we're seeing a lot of new dealers popping up. And I'll chime in real quick because obviously we track a lot of this with our top 100, and we do, and some dealer directory things we do have done over the years. At Boating Industry, we haven't seen any indication of a large increase in the number of dealers since the recession. Obviously, we saw the big drop during and immediately following the downturn. Have you guys seen any changes in that regard that you may have noticed?
This is Noel. Nothing specific, but I would say based on our incoming, inquiries and phone calls, we have not experienced calls from a lot of new dealers seeking to get into the marine, to the boating business. I've not seen that.
And we got time for a couple more questions here, so I'm going to throw one more out there at least. Question is, as the U.S. becomes more diverse, are we starting to see any major changes in boat owner ethnicity? So I'm sure we've got 3 or 4 hours to talk about that topic, but we'll, as you know, it's been a big issue in the industry, but if you guys could give a little insight into that, at least briefly.
We had looked at it several years ago, and it was still relatively small. And we were looking basically at that as an opportunity of increasing. Unfortunately, we just haven't had anyone ask us the question recently, so we don't have anything up to date about that.
One thing I can throw out there. Oh, go ahead, Vicki.
We do an annual survey of boaters, and one thing we capture is their demographics. And the volume is still low. About less than 10% of boaters are an ethnic minority, but it's higher than what it was 7 years ago, 8 years ago. So it's creeping up, but there's still slack.
And I think that one thing I wanted to mention as well is, we talked about this issue a lot. Actually, we did a webinar earlier this year on reaching those new markets and shared a little bit of the data. And that webinar also is on our website, same place, boatingindustry.com/webinars. And we also did a kind of a cover package series of articles on that in our April issue. Certainly to echo what Peter and Vicki said, we've seen it's certainly they're not at the same level. Minority population is not at the same level in boat ownership as they are in the general population. But yeah, we are seeing some growth, and it's certainly been a big topic in the industry, and a lot of efforts from NMMA is doing some work, the Recreational Boating and Fishing Foundation, and as well as a lot of the manufacturers and dealers are trying to do some outreach there. So I think we're seeing progress, but it's not certainly where we want it to be probably.
Yeah, there's actually to your point there, Jonathan. The RBFF has done a great deal of research in this area, and if you go to their website rbff.org, they're very good about publishing all of the information that they've been able to generate.
Yeah, they're a great resource on the topic. So certainly, if you have more interest in that, I recommend going out to do that. And also, if you're looking to use any of that in your marketing, they're a great resource, both from RBFF and Discover Boating, for that matter. Have some photos, imagery, and other things to help you with your marketing in that area. So we are just about out of time, so I'm going to go ahead and wrap it up here. I want to thank everyone for joining us today, as well, and thank our panelists for participating in the discussion. Again, a reminder that this will be available archived at boatingindustry.com/webinars, and that should be posted either by the end of the day today or tomorrow morning. Again, this is Jonathan Sweet at Boating Industry, and on behalf of our panelists, I want to say thank you once again for joining us today. Thanks, everyone, and have a great day.